Investment Bank's workshop on EIB climate awareness bonds, a topic which is of course very important and is at the heart of the different EU efforts to make sure that we use the critical decade now in climate action to the best possible extent. Let me just recall to some of you who are not familiar yet that, of course, the EIB is the larger issuer of green bonds among the multilateral development banks. We have inaugurated so-called climate awareness bonds back in 2007 on the Luxembourg Stock Exchange. We have now issued close to 40 billion in climate awareness bonds and almost 7 billion in sustainable awareness bonds that we inaugurated 3 years ago. In May this year, our climate awareness bond issued on the Green Exchange in Luxembourg was the 1000th sustainable bond listed there. Only 5 years before, in 2016, it was the 100th green bond listing on the Luxembourg Stock Exchange. So you could see how fast this market is developing, how much it has gone, how far it has gone in the last few years. Our statute of EU Climate Bank, of course, is twofold. We'll talk about this more in detail during our workshop. We are, of course, climate bank because we are a climate issuer, but also a very substantive player in financing for sustainable development and specifically for climate action. This is why we have adopted our climate bank roadmap for the years 2021 to 2025, which provides an operational framework for our contribution to climate action, to the implementation of the European Green Deal, and to the transition to climate neutral economy. We have three ambitions. We have committed to align all our financing activities to the Paris Agreement by the end of 2020. We have also committed to dedicate at least 50% of our financing to climate action and environmental sustainability. We already reached the objective of 37% last year. And we have also committed to support 1 trillion of investment in climate action and environmental sustainability over the critical decade. We, of course, also want to align our tracking methodology for green finance with EU Taxonomy Regulation and gradually align our issuance of climate awareness and sustainable awareness bonds with the EU green bond standards. I will maybe spare you the details of how much we have already advanced this work on alignment with the EU green bond standards, but of course this work is not starting now. We have been doing this already in anticipation of the EU action in the last few years. And of course now we welcome the proposal by the European Commission that for the green bond standard that will set the benchmark for high quality green bonds on European and hopefully also on global markets. And I would say that we can only achieve our objectives if we act globally. And of course, the EIB Group as an institution with the global reach is very much interested to support the EU action to become a global leader in sustainable finance, to make sure that we can set really the path for others, because this is how we can all succeed. I think what you can expect from today's workshop is a bit of insight into the Commission's proposals. You can also profit perhaps from the presence of our colleagues from the evaluation function in the EIB and from the capital markets department. so we can bring you up to speed to also on the EIB's contribution to development of the green bond market, as well as to provide some insights as to how the EIB approach over the years with the climate awareness bonds, how it was evaluated recently, how it performs in a very fast-changing dynamic regulatory landscape. So I would like now to pass the floor to Laetitia, who is, you could say, a pioneer in sustainable finance. She started her work in some years ago for an extra financial rating agency. She has built a lot of expertise, and she has dedicated her career to sustainable finance. She spent 8 years managing the sustainable finance audit and advisory practice at KPMG in Luxembourg. And since 1 year, Laetitia is the head of sustainable finance at the Luxembourg Stock Exchange. She's responsible for the exchange's sustainable finance strategy and leads the Luxembourg Green Exchange, the leading venue for green social sustainability and SLB bonds worldwide. So over to you, Laetitia.
Thank you very much, Nikolai, for the introduction, and good morning to everybody. Before we kick off, I'd like to remind the audience of some housekeeping rules. So please note that this workshop will be recorded and will be made available on social media. And please also note that there will be what I hope to be a very instructive 30 minutes Q&A at the end of this session. So if you have any questions, please use the Q&A box at the bottom of your screen. And don't worry if you can't see the questions, because all the panelists will be able to see them in any way. Now let's get into the concrete. As Nikolai said a few weeks ago, I personally had the pleasure to welcome the EIB to our exchange to celebrate a milestone, and that was the 1,000 bond on the Luxembourg Green Exchange. Now, this milestone shows how much the market has developed and matured since EIB issued the first green bond, or shall I say the climate awareness bond, the CAB, back in 2007. So now this workshop is very timely, as I'm sure you've not missed that the EU Commission has proposed a draft regulation that would establish a voluntary European green bond standard last week. So in this workshop, we'll hear from Axel Fournier, who will give us some insights about what the Commission is aiming at with that green bond standard. We'll also hear from Charu and the main findings of the independent evaluation on the CABs. And last, but certainly not least, we'll hear from Aldo to better understand EIB's journey towards aligning to the EU Taxonomy and the European green bonds. So now let me introduce you to Axel Fournier. Axel is a policy officer at DG FISMA at the European Commission, and we are very lucky to have Axel today because he was part of the team who delivered the European Green Bond Standard. Axel, good morning. Could you explain to us what the European Commission is aiming at with that draft regulation, and also describe a little bit the key features?
Good morning, Laetitia. Good morning, everyone. So let me try to bring up my slideshow so that I don't get lost in these details. So let's see. Switch here. Right. So hopefully everyone can see the slides now. So indeed, as Laetitia was saying, the Commission actually put forward a package on sustainable finance last week. So it was adopted by the College of Commissioners. This package included a strategy on financing the transition to a more sustainable economy, so sort of setting out the future actions on sustainable finance. And it also included a proposal for a European green bond standard. So this is what I will discuss today, because I've been working on this with the team here in the Commission. And one thing that's very relevant to mention right now is that this standard is the fruit of years of work. Already to get to this point where we are now, where we have a proposal, that took about 3 years, starting from the action plan on sustainable finance in 2018. Then we had a technical expert group that did really important work on how to take the best practices around in the market and see how they could be combined with the EU's overall agenda on sustainable finance, including in particular the taxonomy regulation, in order to create a new standard that could sort of pull the market up along with it and really cement and promote Europe's already leading role in sustainable finance. And this led to a draft standard thanks to the work of this expert group. And it's I guess relevant to mention that several of the experts taking part in this group were from the European Investment Bank, and the European Investment Bank really played an important role in this whole work on the taxonomy, on the green bond standard as well. So I'm very happy to be able to be here and present this work today. And I congratulate EIB as well on the milestones with the 100th green bond issued. So let me just briefly explain why this is important. Why do we need a European green bond standard? Well, as I think we all know, green bonds are a very important tool to finance the types of fixed investments that we need to transition to a more sustainable economy. I'm talking about energy efficiency investments, renewable energy, electricity grids, transportation, etc., etc. Really, bonds are how such large-scale investments are financed, and green bonds are a way to provide transparency on how that is done to investors and to society at large. So these green bonds are very popular with investors, and especially here in the EU, which is actually showing the way, you could say, because over half of green bond issuance in last year took place in the EU. What we want to do with the standard, so what the Commission wants to do with the standard, is to accompany a growing market for green bonds. We see that the market is relatively small still, so it's about 2 to 4% of the overall bond market, but it's growing very fast, over 40% growth per year, and this has been sustained over the last 5-6 years. So when the market is growing at this pace, there's also the potential for, let's say, there are risks for less favorable elements to take place, for example, greenwashing, or what we're seeing in the market today, which is a kind of boundary creep around what constitutes green investments and what constitutes a green bond. And so our standard is a bit meant to avoid potential problems in the future and make sure that we protect the integrity of this market as it is growing, because we believe that is how green bonds can be the most effective and deliver the most value. So our standard would allow investors to easily assess and compare the greenness of bonds. And for this, of course, we would use the taxonomy regulation, because there's a strong link between our standard and the taxonomy. Our standard would protect investors and ensure the integrity of the market. And for this, we are relying on the second feature of the standard, which is the supervision of external reviewers who deliver opinions for the standard. So like all the major standards on the market, we have external reviewers that come in to check alignment with the standard and also to check that the proceeds of bonds have been allocated correctly. But those external reviewers would, in our case, be supervised by ESMA, by the European Securities Markets Authority, in order to really make sure that their opinions build on a solid basis and that investors can trust them. Finally, we think the standard will be useful for issuers because issuers are always looking for a way to demonstrate their environmental commitment. And we see that, and they're pouring pretty significant resources into it. And we believe our standard will be a sort of standardized way that allows those ambitious issuers that want to really show the green commitment that they're making to demonstrate that. So what is our standard? Well, it's a proposal, as Letizia mentioned, which means that it's not ready yet. It still needs to be negotiated and adopted by the European Parliament and the Council. So even though we propose it now, it could be a year, it could be more before the standard is fully ready to be used. So for this reason, we've actually tried to anticipate a little bit where the market is going. It's not something that's meant to be deployed as of today necessarily. It's a standard that we wanted to be an inclusive standard. So we want all types of bond issuers to be able to use it. And we want it to be not just limited to the EU, but to issuers all over the world. We have not restricted in any way non-EU issuers from using this standard if they want to. Finally, one thing that's very important to mention is that this is a voluntary standard. So the EU, the Commission with its proposal does not want to impose the standard on anyone. We are aware that there are already functioning market standards available there, and our European Green Bond standard could be combined with those standards. An issuer could wish to only use our standard, or they could wish to not use our standard at all and instead rely on other standards. The regulation is completely silent on this point. So how would it work exactly? Well, our standard relies on the use of proceeds principle, which is quite common in the green bond market. So an issuer of a European green bond would have to commit to allocating 100% of the proceeds raised by the bond to economic activities that are taxonomy aligned. What does that mean? That means that each euro raised by the bond has to go to an economic activity that is in the delegated act, that is covered by the sort of by the precise technical screening criteria that have been published online and which are part of the taxonomy. So for each economic activity, those are the technical screening criteria that will determine whether or not the activity is taxonomy aligned. We would allow proceeds to be used for capital expenditure, operating expenditure, or to fund fixed assets or financial assets. And there's a deadline by which all proceeds need to be allocated to taxonomy aligned activities, and that is when the bond matures. Two other important things. First of all, we believe the standard supports the transition. It's a forward-looking standard, as I mentioned. So an issuer may issue a green bond and use those proceeds to fund capital expenditure. For a project, for a long-term project, could be up to 10 years. In order to create an asset that's taxonomy aligned, or maybe to modify an existing asset in order for that to reach the taxonomy criteria. But of course, this is a process that can take several years. Imagine a construction project, or imagine a manufacturer that wants to convert its factory to make it taxonomy aligned. You cannot, at the point that you're issuing the green bond, you don't know exactly what the final product will look like. So you have to set out the plan explaining how you intend to use those proceeds and how the final asset will be taxonomy aligned in a given number of years. And in this way, the standard allows companies to increase their share of taxonomy aligned assets. So that's the transition that I'm talking about. We also have grandfathering provisions. It's a little bit technical, so maybe I don't need to get into that. But basically, if the technical screening criteria are revised, and in some cases they will be revised, for example, for what we call transitional activities, so the manufacturing of steel, cement, plastic, etc. If the criteria are revised, there's a 5-year grandfathering before the green bond issuer has to take into account the new criteria. And this is in order to protect those that have already issued a green bond, to give them some stability. When it comes to transparency requirements, we are very much aligned on what's out there in the market today. So instead of green bond framework, we talk about green bond fact sheets, but it's essentially the same thing. It sets out the plan of the issuer and how they intend to use the proceeds on taxonomy aligned activities. After issuance, there is a yearly requirement for allocation reports where the issuer will demonstrate how the proceeds have been allocated to taxonomy aligned assets. And before maturity of the bond, the issuer also has to publish an impact report setting out the aggregate environmental impact. These requirements will actually be supervised, according to our proposal at least, by national competent authorities to make sure that issuers are publishing the required documentation. And then this is very closely linked to the external reviewers, because external reviewers are necessary as part of this standard. They come in first to review the green bond fact sheet before the bond is issued, and they will give their opinion on whether or not the bond complies with the requirements of the European Green Bond Regulation. And then they come in again once all proceeds of the bond have been allocated in what's called post-issuance review, where they will check again the taxonomy alignment of all the economic activities that have been funded. I won't get into the details, but a big chunk of this proposal is the registration and supervisory regime for external reviewers. So any external reviewer that wishes to provide their services according to this standard would have to register with ESMA. It could be an EU external reviewer, but also a non-EU external reviewer. We have specific provisions to allow them to also offer their services. And if they do so, they will have to show that they have the experience, the qualifications necessary, that they're organized in a way that avoids conflict of interest. They would have to be transparent. They would have to have a separate compliance function, and they would have to disclose their methodologies and the assumptions and the sources of information that they use. ESMA, in turn, would have the power to investigate complaints or impose fines and even withdraw registration if necessary. So those will be the full supervisory powers that are typically given to a supervisor. That's it for me. I hope I wasn't too technical. Thank you.
No, that was perfect. Thank you very much, Axel. As you said, this was a long-awaited regulation, and I must say that it keeps up to its promises, notably by putting such a strong effort on transparency and verification around the use of proceeds. So thank you for the details, Axel. Now let me turn to Charu. Charu Wilkinson is an independent public policy expert based in Berlin. And she has 20 years of research and evaluation experience, focusing primarily on EU financial instruments and financial markets. So she was the right person, actually, to conduct an independent evaluation of the EIB cabs. So Charu, the results of this evaluation were published in a report in April this year. Could you tell us why this evaluation has been carried out and let us know what are the main findings and recommendations?
Sure. Morning, Letitia. Morning, everyone. Thank you for joining today. So just like Axel, I've got a few slides to set out the evaluation that covers some of the topics that Letitia just mentioned. So just opening these slides up. Okay. Are you able to see my screen?
Not yet, but it's coming.
Okay. Yeah, just give me a shout when you can see and I can start. Okay.
For now, Charu, we can only see your name. The presentation is coming.
Okay, great. Okay. So we carried out this evaluation last year. It was finished in November and the report was published earlier this year. I'll just briefly provide the context for this evaluation just by way of background. So since the EIB issued the world's first green bond in 2007, the institutional, policy and market context have substantially changed. And Nikolai, in his introductory address, provided us a flavor of some of these changes. For example, at an institutional level, we have the EIB's transition into the climate bank. At a policy level, we've got the ambitious climate action targets set by the European Commission. I think, sorry about that. I think we are having a little bit of trouble with my...
Don't worry, Charu. Someone else will be sharing the slides for you.
Okay, super. All right.
That's
okay.
it.
Okay, great. Okay, so I'll continue. So in terms of policy, we have the EU's ambitious climate targets, plans to become a climate neutral continent, and related to these policy targets are initiatives such as the Green Deal Investment Plan, which set out the Commission's plan on how investment will be mobilized to meet these ambitious green targets. And as you're probably aware, the EIB is expected to play a key role in the achievement of these targets. And finally, the market has substantially developed, both in terms of size and sophistications. We have new market standards which are coming up. We just heard Axel's presentation. There has been substantial growth, development of and diversification of the sustainable finance market in terms of the diversity of issuers, investors, products. There's a well-established market infrastructure now. And finally, what we see are shifting mindsets and perspectives on climate risks and ESG, which is also seen by the booming interest in ESG amongst investors. So given all these changes, it was a good time to take stock of the EIB's activities and achievements and to consider the implications of these changes for the EIB's green bond future. So the evaluation addressed 4 key questions, and I should just mention that it was both backward-looking and forward-looking. In terms of the backward-looking aspects, we looked at the EIB's contribution to the development of the green bond market. We looked at how the EIB's cap framework compares with the green bond frameworks of other issuers. And to make the exercise interesting, we focused on issuers that are highly regarded within the market because they've achieved recognition or awards for their green bond framework. We looked at the costs and benefits of the green bond activity because that's often an issue of interest, and also sometimes the potential issuers are deterred by the cost of green bond issuance. So we thought it would be interesting to look at both the costs and benefits. And finally, we looked at how the CABs could be used by the EIB to reorient capital flows to more sustainable activities. Moving on to the evaluation findings. So the key headline messages that emerge from the evaluation are as follows. We find that the EIB has played a foundational role in the development of the green bond market. So the EIB issued the world's first green bond. But since then, it has regularly issued green bonds, and the scale and regularity of these issuances has contributed to developing the market by providing liquidity, by making the market attractive for investors. And the EIB has contributed to opening new currency markets, and it has covered a wide spectrum of tenors ranging from 2 to 30 years. The EIB has also played a role in contribution of market standards. So the EIB provided significant inputs and expertise to the development of standards, most notably the ICMA's Green Bond Principles, the EU Green Bond Standard, and the EU Taxonomy. When we compare the EIB's cap framework with other issuers, we find that it is among the best in class. And there are a few points that I would like to highlight here. Firstly, the use of proceeds is aligned with EU legislation on sustainable finance. We find that there is a dedicated sub-portfolio in Treasury for unallocated proceeds that provides complete transparency on the use of funds and allocation. There's detailed allocation and impact reporting at project level, so you can see exactly which project has received an allocation and what the environmental impact of that project is. And finally, the EIB gets assurance by a supervised external auditor. And the opinion can sometimes be split on this last point, because when we were doing the evaluation, people often raise the issue of a second party opinion, and the EIB does not get a second party opinion. There are good reasons for it, and it's well justified, and we regard it as a good practice in the context of the EIB. Coming to the benefits, some of these benefits are also captured in the literature, and when we spoke to other issuers, they have also benefited from some of these things, such as investor diversification, halo effect on conventional bonds. So some of the ESG aware or ESG conscious investors have also started investing in the EIB's conventional bonds following the issuance of CABs. There are reputational benefits, and the issuance of CAP further reinforces the EIB's credentials as a climate bank. We found some evidence of greenium, although it's not systematic. And when there was a greenium, it ranged from 5 to 10 basis points. We also looked at the additional cost of CAB issuance, and we find that they are marginal. In the context of a bank, a lot of the costs are business as usual costs that relate to issuance of bonds. So we really looked at the incremental costs of CAB, and they weren't found to be significant. They were related to some staffing costs associated with the management of the CAB framework and the cost of doing an external review. But by far, the benefits exceed the costs. And finally, the evaluation finds that the CABs could play a key role in stimulating green investments going forward. And this can be done through two channels. One could be a financial incentive. So if the greenium is more systematic and certain, this greenium could potentially be used to provide a pricing advantage to green investments. Or in the meanwhile, the CAPs could also be used as a non-financial incentive, because within the EIB, there is an infrastructure that enables the unequivocal identification of green projects which receive CAP allocations. And it's kind of a badge of green honor to be on this list, and projects can use that as for reputational gain and to get pricing advantages from the market. But there's always scope for improvement and innovation. And so we have a series of recommendations for the EIB's green bond future. The first is to provide more volume and liquidity to the green bond market through reference size transactions. Secondly, we recommend that the EIB should lead the way in the practical application of the EU Taxonomy Regulation and the EU Green Bond Standard, which it's already doing in fact, and Aldo will talk more about it in his presentation. Our third recommendation is to systematically monitor the greenium on the EIB's CAB issuances, and this would provide the evidence base to inform any future pricing decisions for green investments. The fourth recommendation is that the EIB should continue to expand the range of green financial products on both the funding and lending side. So, for example, green securitization is an area where the EIB could potentially be an issuer as well as an investor. And there are other sort of products that are already being developed within the bank. The fifth recommendation is for the EIB to engage with bond underwriters on ESG matters. And finally, we recommend enhanced impact reporting in line with the EU taxonomy and also highlighting the links between CAPs and SDGs. So this is a very, very high-level view of the evaluation report. It's available online on the bank's website, should you be interested in reading the full document. And I'm happy to answer any questions that you may have. Thank you.
Thank you very much, Charu. Great insights, actually. There are some key takeaways here, notably around the marginal costs of issuing a CAB. I think that could be interesting for issuers to know that, and also the fact that the greeniums should be closely monitored. And I was quite happy also to see that EIB uses already a supervised external auditor, for instance. So that's key points that are important to know. But now I'm turning to Aldo Romani. Aldo, you're the head of sustainability funding in the capital markets department at EIB, and you've been at the heart of the CAB's developments. So one of the recommendations of Charu's is that EIB should lead the way in the practical implementation of the EU Taxonomy Regulation and the EU Green Bond Standards. Can you tell us a bit more about EIB's concrete steps to apply these recommendations? I think I'll know that you're on mute.
Fine.
Good.
Sorry, one
That's
second.
fine.
1 second. So, can you hear me now?
Yes, we can.
All right. So let me go back to the presentation then. So First of all, thank you very much for the introduction. And as we have heard, what we are talking about today is how to promote clarity to facilitate sustainable investment, and the EIB can be used as a test case. Let me start by, in fact, highlighting what the reference framework for the EIB is in even a broader way than the Commission has done. So capital markets play a core role in EIB's and the EU's action towards sustainable development. Sustainable development is a priority of Europe, enshrined in Article 3.3 of the Treaty on European Union, which clearly states that the approach is a pragmatic one. The EU pursues this objective with the help of an internal market, and capital markets are a core pillar of that market because they are dynamic, they are global, they look forward and act on expectations, so they are less sticky than other parts of the market. When the European Commission indicated its intention to reform sustainable finance in September 2016, it made it within the context of the measures towards a capital market union, and highlighting that the objective was to ensure that the financial system can finance growth in a sustainable manner in the context of the G20. The EIB is a test case because the mandate attributed to us by the Treaty on the Functioning of the European Union is to promote, to contribute to the balanced and steady development of the internal market in the interest of the Union by making recourse to the capital markets. So at the same time of the announcement of the Commission in September 2016, a Green Finance Synthesis report of the G20 highlighted indeed that lack of clarity was a major hurdle for green investors and suggested a possible solution. Realistically, not the one-size-fits-all approach, but rather the idea that you can establish a common language that makes the market more efficient and directs them adequately. What does this mean? But basically agree on the core features of sustainability and agree also on core comparable indicators to measure, in fact, substantial contribution in the relevant areas. These are principles that have been adopted in full by the EU Taxonomy Regulation that entered into force last year. And I refer in particular to Article 19, which clearly states that the technical screening criteria shall identify the most relevant potential contributions, be easy to use and easy to verify. So this is the guiding principle that inspires this whole action, with the idea that the uniform classification across jurisdictions will secure fair competition in the market, and at the same time, if applied along the investment chain, will provide an effective criterion of choice to investors. So the core idea is embedded in Article 1 of the regulation. It clearly states that what is important in determining the sustainability of a financial product is not the product itself, but rather the activities in the economy that will be financed with the proceeds of that product. So if investors are asked to report on the sustainability content of their investment portfolio, and they go to an intermediary like the European Investment Bank, for example, this information, the relevant information, will be, of course, to be sourced on the lending side of the bank that is closest to the final investment of the financial resources into the economy. So this is a core idea that has two strong implications. One, capital markets have a role not only in providing capital, but also in terms of identifying where the capital should be best deployed. The second idea is that this framework establishes also a univocal framework for the funding and the lending activities of an intermediary like the EIB. So this is an approach that very much matches the long-term strategy of the European Investment Bank. As you heard, we issued the first green bond back in 2007. We did this because we wanted, in fact, to test another piece of European legislation. The first green bond was also the first bond to be offered publicly to retail investors in all countries of the European Union. The minimum denomination was €100 at the time, and we tested the prospectus directive for this purpose. But of course, we needed an idea that could be sold everywhere in Europe in the same way. The fight against climate change was the topic of the time in Europe. The 2020 Energy Action Plan was launched, and the EIB try to establish a link between capital markets and this scaling up of financing in the area of renewable energy and energy efficiency that it was pursuing as the Bank of the European Union. The first objection that came from the management committee was, well, this is going to be financed anyway, so where is the added value of your product? And the only way to do this with this objection with substance was to say, objectives are set in terms of signatures, but we will put in place an infrastructure that will permit markets, in fact, to monitor how the funds are effectively deployed into the economy over time. And there is a time lag there. So it was an important idea, very fruitful, as we have seen, because it introduced the notion that it is possible to report on actual disbursements, and not only in terms of sectors, but also in terms of policy objectives. A very clear element of importance for investors from 2013, 2014 onwards. So it is this element that explains why the EIB was asked to participate in the whole debate that has led in fact, to the approval and entry into force of the taxonomy regulation last year, and where the EIB contributed not only its technical project evaluation expertise, but also its capital market expertise. So now, the EIB Group Climate Bank Roadmap 2021-2025 is the most important operational document in the relevant area. And there are 4 statements that are crucial relevance for us. The first one is that the EIB intends to increase the share of green finance to at least 50% of its new yearly operations by 2025. The second statement that is that the EIB Group will measure the delivery of this objective in line with the tracking methodology that will be aligned with the framework defined by the EU Taxonomy Regulation. The third is that this alignment on the lending side will be reflected to capital markets via the progressive extension of CAB and SAB eligibilities, climate and sustainability awareness bonds eligibilities, our sustainability funding instruments, that of course we planned to gradually align with the proposed EU Green Bond standard. And the focus here is really on the second element. The EIB has put this in black and white, and our projects directorate has already published a new taxonomy line and transition plan. It is table 5.3 of the Climate Bank Roadmap that you see here on this slide. Of course, one needs to adapt to delays as they materialize. For example, the delay in the delegated act on the taxonomy for climate. But I can tell you that, for example, the EIB has decided already this year to apply, in absence still of a formal and final taxonomy, the TAG eligibility criteria, for example, to all the allocations from CAPS in the areas of climate change mitigation. Now, what has been done also in terms of timely initiatives on the funding side and in close cooperation with the project side? Well, first of all, already at the end of 2018, we extended the climate awareness bond approach that was limited, as mentioned, on renewable energy to renewable energy and energy efficiency projects only, with the new product, sustainability awareness bonds, that cover, in fact, all other areas of environmental and social sustainability. And in doing so, we adopted new documentation for the use of proceeds that establishes a direct link between the allocation of the proceeds and evolving legislation on sustainable finance, including the taxonomy regulation. Then we developed plans for CAB and SAB product development in the context of the Climate Bank Roadmap. We already last year indicated the course of travel in our official communication with investors, indicating that we would align with the EU Green Bond standard and any possible future social settlement standard in the context of the taxonomy regulation. We illustrated to banks and investors our strategy on the occasion of each issue that has been brought to market since 2018. And most importantly, we have established at the bank a proper operational framework, since sustainability funding has become part of the Climate Bank Roadmap implementation plan as part of Action Plan to Strategic Business Development. So here the focus is clearly on this documentation aspect that you see detailed on the next page. The presentation will be distributed, so I don't need to go into the detail, but you see here exactly the early adoption of a close link with the initiatives of the European Commission in the area of sustainable finance legislation. So what is the business model that we have then put in place? De facto, climate awareness bonds and sustainability awareness bonds so far have covered only a limited portion of the EIB's balance sheet. But as the taxonomy is applied to the lending side of the bank, there is room for an extension of the scope of these two instruments to further areas of the bank's balance sheet, thereby providing a high degree of transparency and comparability in the relevant fields. This has an immediate impact in terms of our issuance volumes. Last year, thanks to the first extensions of eligibilities, we were able to more than double the volume of issuance to 10.5 billion. And this year, the pace of issuance is unabated and even slightly higher in terms of the overall funding program that has been brought to market so far. So in terms of now the progressive alignment with the upcoming EU Green Bond standard, well, the core features of the caps and subs are important in this context. I mentioned already the first one. We only allocate to new eligible disbursements that take place after bond issue date and without refinancing of already outstanding disbursements. This feature, coupled with the fact that the loan eligibilities are, yes, decided upon board approval, but also reviewed by our experts upon disbursements, make our program particularly apt to adapting in this field, because we will be able to immediately align with the criteria finally adopted by the Commission in our allocations going forward. Double counting is excluded. Once you allocate or attribute substantial contributor to one objective, that cannot be changed, and especially cannot be you cannot allocate to the same to other objectives, which avoids inflation of figures. The allocations are automated, follow a first-in, first-out rule, and this permits us to report for each of the bonds we issue, be it a new bond or a tab, on the exact allocations to the projects that have been allocated. Also, our allocations are frozen and booked twice a year in a separate treasury portfolio, and this makes the figures auditable, which is very important because we publish allocation and impact reports yearly in CAB and sub-frameworks that are audited by KPMG with reasonable assurance. So if you come to a comparison between the practice of the EIB and the green DGBP, SBP, and the EU Green Bond standard, you can see that in the non-taxonomy related aspects, in fact, we are already aligned, and in the area of alignment with EU sustainability taxonomy, we are already advanced in terms of preparations and actual delivery. What is happening, and here I finish my presentation, this year is that we are making this alignment process transparent to markets. In the 2020 caps and sub-frameworks that will be published after the summer, we will first describe in detail the strategy that I just sketched. We will amend the description of the cap and sub administration to align with the logic of the UTR. In a new annex, we will disclose all the technical screening criteria that were used last year for the allocations from caps and subs, for sub contributions, and where feasible, like in the case of caps, compare them with the technical screening criteria for substantial contribution that were published last year. In another annex, we will rearrange all the information in the frameworks in accordance with the UGBS template proposed by the TAG in March last year. And finally, we will improve allocation and impact reports to live up to the UGBS requirements proposed by the TAG. And once again, we will ask the external auditors to assure not only alignment with GBP and SBP, as we did in previous years, but also in terms of the alignment of non-US key components of UGBS and the alignment of the use of proceeds with the logic of the EU taxonomy and with the TAG proposal in the case of caps. So in conclusion, in terms of a more general, let's say, statement to the market, it is clear that the EU taxonomy and UGBS regulations aim to facilitate sustainable investment. Until entering into force of the relevant taxonomy and UGBS, the logic of the respective regulations can be used. This can be used by issuers to start collecting and organizing information, but also by investors to better assess the status quo and what the issuer intends to do. In particular, this can be applied to technical screening criteria for substantial contribution according to the core principles of most relevant potential contribution, easy use and easy verification. And we have applied this logic early and consistently so that we can be taken as a test case in this field. So conclusion, act now. It is possible already to start taking action, and this is something that will count increasingly as the legislation of the European Union comes into force. Thank you very much for your attention.
Thank you very much, Aldo. I think we get the message that the EU taxonomy and the EU green bond standards should not be seen as only a strict pass or fail test, but also as frames to standardize and improve processes. So there's no reason to wait until full application of those regulations. And if issuers don't know where to start, they can certainly use EIB as a test case, I believe. So now, just as we enter into the Q&A session, I just wanted to remind the audience that if you have any questions, you can write them in the Q&A box, and the panelists will be able to see them and answer your question. There's a lot of insight from what we heard, so please do feel free to write your question directly in the Q&A box. Now, let me start with one question that I have for Axel. Axel, before the European Green Bond standards, there was already other types of standards or principles or guidelines that exist in the market. Isn't the multiplicity of standards not going to be confusing for investors? And how does the European Green Bond standard relates to the other standards?
Yeah, thank you. That's a good question, of course, and one that that one that's really set the context for this work, as it has been going on over multiple years, as I explained. Our standard is not the first, but we have reflected that by building on what is already available. So when it comes to reporting, when it comes to the requirement to obtain external review, we have tried as much as possible to align our standard with existing best practice out there. So ICMA's Green Bond Principle, Climate Bonds Initiative standard in particular. Where our standard goes maybe a little bit further is in the use of the EU's taxonomy. Of course, I mean, it's natural that that the EU would use its own taxonomy for this standard. This is also basically the intention, and of course also the external reviewers needing to register and be supervised by ESMA in order to really sort of standardize a bit that market, which I think will help both issuers and investors to really get a better idea of these external reviewers, what their role is and what we can expect from them, because their role is very important in the regulation on European green bonds. So you have to make sure that they're then held to a standard that fits that.
Yeah, actually, it's true that the external review part is a huge part of the regulation. It's many pages at the end. But maybe we can ask Aldo about this experience with external reviews. Is that just a burden or an additional thing that we have to do and it's complicated, or do you actually learn from that? And what's the benefit of having an external review? Can you tell us a little bit more?
As you know well, we started our intensive discussions with the external auditors at the end of 2015, and then put in place the first CAP framework in 2016. There are several aspects to external review that are of relevance from the issuer's point of view. First of all, you want to make sure that when you go to investors and put your face in front of them, what you have established as an infrastructure is effectively in place. And having the assurance of an external reviewer helps you a lot in this regard, because it puts, of course, people in the position of clarifying and testing whether, in fact, action has been taken after the approval. There is another aspect. There is also an aspect of interaction, constructive interaction with the auditors in terms of clarifying areas that can be further improved, for example. I'll just give you an example. Since this aspect of monitoring the eligibilities over time based on new information, which can depend, in fact, on either the unfolding of the project and or the change in technical screening criteria for its evaluation. It was, in fact, the contribution, thanks to the contribution of KPMG, that we started a more detailed process of implementation of new procedures that would secure quality checks in the course of time, and not only at approval of the bond. So in this case, I personally think also that the highest degree of assurance, so for example, reasonable assurance as compared to limited assurance, provides a high degree of reliability, not only to investors, but also to the people that internally are supposed to promote progress in the right direction. And it is a process indeed. I think what I tried also to show in the presentation is that you have you must take a kind of an evolutionary approach. And the frameworks that are established, the Green Bond principles in the past and now the EU Green Bond standard, allow people from within to really reflect on the status quo and improve with the help of an external reviewer that bears in mind the interest of the capital markets, with a high degree of authority, the dialogue with the technical areas that are involved. So, for example, in our case, the project's directorate. And this is to the mutual benefit, I would say, because we can make it clear in this way to our colleagues, our engineers, what is relevant in a capital market perspective, and they, on the other hand, are finding and developing solutions that suit indeed the requests of the market. And in this kind of dialogue, the external reviewer is an essential component if you take things strategically.
Mm-hmm. That's really a strong message, I guess, to send across to the other issuers, because that part on external review can be seen as a constraint and can scare some issuers off. But then if you say that you also learn from it, and that's a learning exercise, and you can improve afterwards, that's really a different thing. So it should be seen as something that can help as well. Sharu, I was looking at the report, the evaluation report the other day, and I was especially interested into the impact reporting side. Impact reporting is actually the key, right, to measure the impact of the use of proceeds. And in your report, you highlight quite rightfully that there are different ways of reporting, sometimes at portfolio level, sometimes at project level. Can you tell us a bit more about the main differences and approaches in impact reporting?
Thanks for reading the report. I'm glad people are reading it because we don't always know where they end up. So yes, so just by way of background, let me just first clarify which other institutions we looked at. We looked at 6 issuers of green bonds, and these were a range of institutions, including financial institutions, energy companies, regional authorities, and SNCF from Belgium. And amongst these 6, as well as EIB, as you indicated, we found 2 different approaches to impact reporting. One was at the portfolio level. So this was at a slightly higher level where an organization such as ING, for example, would report the impacts achieved in the area of green buildings. So the impact for their portfolio of green buildings, or it could be in the portfolio of renewable energy or energy efficiency. So that's really high level. But the EIB, IFC, and some other organizations go a step further. They provide line-by-line reporting at project level, and you can sort of in the report you can see every single project, what was the allocation, what was the impact, and often there are links in the report, so you can click on the project name, and that provides you further additional information. So when we spoke to market players, there was a lot of appreciation of this level of detailing at project level, and they appreciated the transparency and the fact that they could just download this data and use it for their impact reporting purposes.
Yes, actually, that's also what we see at the stock exchange, different ways of reporting on impact. And I'm wondering whether that's also something that is important for investors, because in their EU taxonomy reporting, especially within the SFDR, Sustainable Finance Disclosure Regulation, they will have to know if they invest in bonds, what are the impacts of those specific bonds. So that's really important also, that EIB shows the way in publishing the impact, not only at bond level, but also at project level. Axel, talking about impact reporting, I think there's an annex in the European Green Bond Standards that is specific to impact reporting. Can you tell us a bit more about this part, and will that be reviewed as well?
Yeah, so first of all, no, the current proposal does not require a review of the impact report itself. But what's important to keep in mind is that with the taxonomy regulation and with the use of these detailed technical screening criteria for each sector, including, of course, do no significant harm, right? You have to not do significant harm to the environment. You're already providing a lot of information on the environmental impact. And that means that in order for the issuer to show that they are taxonomy aligned, they already have to provide the information on the environmental impact. So that could also come in the allocation reports, which will be reviewed by external reviewers. So in that sense, when we say environmental impact report, we're looking at one report that can come towards the end of the maturity of the bond, after all proceeds have been allocated, and give a more aggregate look at what this bond has achieved, which of course, you know, an investor that's not following day to day would be useful for them.
Mm-hmm. Right. I'm looking at a question from the audience, also directed to you, Axel. Does the EU Green Bond Standard proposal allow to allocate funds to activities that are not yet covered by the taxonomy, provided that the substantial contribution, do no significant harm, and minimum social safeguards logic is used and transparency explained by the issuer?
Yeah, so that's a good question. This is actually one of the points in which the proposed regulation diverges from the draft of the technical expert group on sustainable finance, because when we're drafting legislation, we have to be, we're a little bit bound by that. And the taxonomy regulation is a piece of EU law, and it sets out these 4 conditions: do no significant harm, substantial contribution, minimum safeguards, and the technical screening criteria. It sets out all of them in an article, and you can't really pick and choose. You're either aligned with all of that or you're not. Of course, the taxonomy regulation is or the taxonomy regulation and the whole sustainable finance infrastructure, so to speak, that we're setting up is an evolving endeavor. It is a forward-looking endeavor. We are not saying that as of today, everyone has to be taxonomy aligned, and we're not really that interested in knowing exactly today how much taxonomy alignment there is. We're interested in getting to a point where there is more taxonomy aligned. So this is an evolution, of course. In that sense, it's important to keep in mind that, first of all, the Green Bond Standard is not ready yet. It will have to be adopted. The taxonomy delegated acts are being rolled out progressively. They do not cover all economic activities now, but they already cover a substantial chunk of aggregate emissions, and that coverage will only increase in the next 1-2 years. So yes, there is that limit that you can only show taxonomy alignment if there is a technical screening criteria to do so.
Thank you, Axel. I see another question, and that's maybe a general one, so addressed to all panelists. That's a question: what is the market view in the light of the next-gen EU bond issuance and the SURE program, how the demand for sustainability and social bond can evolve? Who would like to take this one? Maybe Aldo as a start, Axel as well. What would be the demand for sustainability and social bond?
Well, As you know, the Commission has already indicated that 30% or even slightly more than that of Next Generation EU will be raised in green bonds. And it is clear that the issue of definitions that are indeed in the context of the taxonomy regulation and its implementation at the time is of extreme relevance in this context. It also highlights the fact that the sustainability of debt is not only linked to the, let's say, nature of the debtor, but also to the way in which the money is actually spent, with an increasingly increasing focus of investors on the binomial relationship that exists between sustainability and productivity. So it is definitely a very important development that is taking place, and the Commission indeed will, of course, be a test case also for the implementation of the taxonomy regulation in the course of time.
And Axel, is there any reflection at the European Commission around sustainability and social bonds as well, and standards?
Yeah, so I have not been working directly on the social bonds. It's true that the EU has issued social bonds using the ICMA social bond principles. What I think is publicly known is that this was a huge success. The bonds were very highly subscribed, and there was strong demand from investors. They obtained a negative yield on this, and of course that is savings that are passed on to EU taxpayers. So for the Commission, from what I can say, it seems that this was really an unmitigated success. Now, of course, we have to distinguish different things here. That was the Commission issuing a bond. What I'm working on, or what we're working on here, is a standard that will apply to all market participants, so corporates, banks, and also sovereigns, etc. Yeah, does that answer the question?
Yeah, sure. You mentioned sovereigns, and that makes me think about the sovereign flexibility that is given when we look at the draft regulation on the green bond standards. Can you tell us a bit more about that flexibility around sovereigns and why it was put like that?
Yeah, this is indeed something that that people are curious about, and they want to understand better how it would work. So happy to explain. We have indeed proposed limited flexibility for sovereigns in order to take into account the specific nature of sovereigns, which is maybe something that other standards don't take that much into account. So the two examples, the only two examples that are there in the regulation are, first of all, with regards to what you could call a high-level funding program. So, for example, if a country is giving tax subsidies for installing solar panels, or maybe there's so if there's a subsidy program or a transfer program or a tax relief program, which you often see, then these programs are, of course, they have their terms and conditions, and they're the conditions by which the country or the government will decide whether or not to allocate this, let's say it's a tax relief. We expect countries to enforce their own laws in this sense. So we are not requiring the external reviewer to go in and check for each project that received tax relief, or for each household that received that, whether or not, the specific conditions of the taxonomy were complied with in that case. If the terms and conditions are taxonomy aligned, that is what we are interested in, and then we expect the sovereign to be able to enforce their own rules on this. The other flexibility is a limited one. It's the option for sovereigns, if they wish to, because we have seen this in certain cases already today, when sovereigns issue green bonds, they can use a state auditor or an independent public auditing body in order to provide the external review services.
Okay, thank you, Axel. Turning to Aldo. Aldo, in these standards, there are several annexes, and Axel mentioned that there is the fact sheet, which is the framework, if I understood properly. There is the allocation report and the impact report. So, and you already have at the EIB a very extensive framework, if I can call it like that, but it's more a statement. Can you tell us how you will adapt that piece of work to align more to the green bond standards? Well, and the effort that it requires, if it does.
Well, first of all, I would like to highlight that the logic of the EU Green Bond Standard is not different from the logic of the green bond principles or the social bond principles for all the metals. And it is obvious. You need to describe in detail what you intend to do, and then you need to provide, in a way, proof that what you said you did. Yeah, with the additional, let's say, support in terms of reliability that is provided by a third party. Now, what we have been doing concretely in order to, let's say, already start action at the moment when the UGBS was still at the level of a proposal, which was the TEG, has been to define a plan for the alignment with the EU Green Bond Standard as proposed, taking the TEG proposal, in fact, of June 2019 as a reference. In the appendix to the presentation, you will see in concrete what, in fact, we have decided to do. I think that we are taking, for example, this year's CAP framework and sub-framework as an intermediate step. And what is most important at this moment is to clarify how we are managing this transition. And the way in which we are managing this transition is to recognize that the green bond principles and the social bond principles are still a standard that is already in place. So we do need to maintain the current corpus of the document, because that corpus is, in fact, tailored to the requirements of that standard. But at the same time, we need to provide a signal and also start rethinking how we can rearrange the information for the moment when the UGBS will be in place. So this is the reason why we chose to add this annex, this new annex to the document, in which by reference, we basically rearrange the information. Of course, we did not have the regulation proposal in our hands, and this is the reason why we used the template that was proposed by the TEG in March 2020 as a reference. So in this new document, you will see that all the information that we already had in the document is also living up to the requirements of the TEG proposal and can be restructured according to the new proposal. So next year, we will, of course, take as a reference what has been proposed now by the Commission in the regulation proposal. So this is, in the essence, what we have been doing. Now, I made a distinction also in the presentation between the non-taxonomic components of the EU Green Bond Standard and the taxonomy-related component, because the taxonomy-related component is, of course, also a complex one. So just to tell you what we decided to do last year, when we extended eligibilities, for CAPs, for example, we decided to use for allocations the TEG criteria. We left the criteria for renewable energy and energy efficiency unchanged, because the idea was to compare them in this year's document with the proposal, with the taxonomy to be adopted by the Commission by the end of last year. Now, this delegated act has been moved forward, as mentioned, so we are comparing them with the proposal of the TEG with the taxonomy. Next year, we will repeat the exercise using, of course, the final version of the taxonomy for climate as a reference. And this year, we have decided to apply the TEG criteria also to the area of renewable energy and energy efficiency. So this is a way by which you can make transparent what you're doing according to a rationale that the market can understand. And by making it transparent, you also make it uncontroversial, because it is not just a question of making a statement, but it is also a question of implementing things on the ground. And this, as everybody knows that is indeed dealing with these things practically, is a complex exercise. At the risk of being long, let me add one word, because I think that the question immediately comes. How do you manage the transition in areas where you do not have a reference like the TEG proposal for the climate taxonomy? And this is important because we have seen indeed that the market and the demand in the market for bonds that focus on the social aspects of sustainability has grown substantially. So there is the need for a high degree of comparability also in these areas. And here, the point that we have tried to make also, for example, in the context of the social taxonomy working group of the EU platform on sustainable finance, is that what is important in this phase is not to think theoretically about things. What is important and is to identify the areas that can be shared, minimum common denominator that can be shared, that can be ascertained where data is available and can be compared across jurisdictions. So in our sub-framework this year, we will publish all the criteria that we used last year and that reflect the judgment of our experts in areas that are not yet mapped by the taxonomy regulation that is focused only on environmental objectives thus far. Of course, there is also a dynamic evolutionary process in this area that will require intervention by the authorities in terms of creating and fostering data banks for the collection of data that is not yet available in that form. So the market is providing a contribution to this process by, how can I say, using the Occam's razor of clarity to decide what can be ascertained at this moment. And then there will be an evolution over time. So what is important, however, is to structure the information in such a way that it becomes visible and that it becomes comparable. And this can be already done today. And those that will move sooner will also, how could I say, develop a strategic edge. So it is market forces that are at play here, creating, how could I say, a push towards the future, thanks to the enabling framework that the Commission has created.
Yes, what I hear from what you said, Aldo, is that there is really a need for, you need to start somewhere first. You need to start somewhere what you have, and you need to provide transparency in your efforts towards investors as well. So even if it's not complete or it's not finished or you're in the process of integrating or aligning to the taxonomy, then you need to be transparent to the investors and other players on what you're doing and structure the data in a way that it's comparable at the end. If I got your message.
Absolutely. Now, and in this process, market participants, those that indeed deal with issues on the ground, have the possibility to show their voice. So by making transparent the result of their judgment, they also provide, I would say, food for thought for the discussion that is ongoing. And in this way, also, the regulator is in a position to judge of the materiality of the inputs that are coming from the market.
Absolutely, yeah. Sharu, in your evaluation report, when you talked to different players, did you hear a lot of, did you have the impression that investors were really looking for alignment to the taxonomy? And when talking to issuers, what were the main difficulties or what were the main challenges to align to the taxonomy? Did you address that point in your evaluation?
Not in detail, but we did ask, investors and issuers with their, as regards to expectations with the EU taxonomy. And I think there is the message that we got that yes, the taxonomy is going to be an important standard going forward. And the issuers that we spoke to, they were already thinking of ways on how they would align their activities with the taxonomy. But we did not really explore as part of our evaluation what barriers the issuers were expecting to encounter in terms of implementation of the taxonomy, because as you know, that the Commission had launched a consultation covering these specific aspects. So
okay, so we look forward to seeing what will be those challenges and how they can turn that into opportunities. Axel, I have another question that is more specific, and it's regarding private placements. How do we deal with the legal? I understood that the fact sheet, which is the framework, is a legal documentation. So if it's a private placement, who is going to look at that and who is going to check the alignment to the regulation?
So whether or not the fact sheet is a legal document, I mean, that may depend a little bit on the jurisdiction. What is for sure is that we have a requirement in the regulation that the issuers who are under the prospectus regulation, so those that are required to publish a prospectus, they have to mention that their bond is, you know, following the requirements of the European Green Bond Regulation. So that is sort of for us the main legal requirements and how the legal basis is established, for example, to supervise and also to, you know, create this sort of civil liability, which is important. But when it comes to exactly how it will work for private placement, I have to admit that we have not gone into those details yet. We of course aim to have a standard that is as inclusive as possible and can be used by all bond issuers. So you know, this is maybe something that we would have to look at in more detail.
Mm-hmm. Right. Okay. I don't know if there is any other questions in the audience. In the Q&A, I don't see much of them for now. So what I'd like to do is I'd like to give you the floor once again to the panelists for their final remarks or key message that they want to give to the audience today. Can we start maybe with Axel? Axel, what is your final remark on this green bond standard? What do you want to share and the audience to remind?
Okay, well, I think one thing that's important to mention that maybe I didn't mention is, of course, how thrilled we are about the European Investment Bank's climate bank plans, and what Aldo has been mentioning today about this plan to gradually align with the European Green Bond Standard. I think that just shows that the standard is usable. It is possible to align with the taxonomy. Of course, there are other examples of issuers out there who have also issued bonds aligned with the taxonomy as it exists in its current state. But the fact that a large issuer like EIB is doing it, that is really good news. And the fact that it's even providing this information at project level, which is something that we highly encourage in our standard, that just really shows the way. And of course, it's still early days, so the standard itself isn't ready yet. It has not been published in the EU official journal yet. First, we need to see how negotiations go with member states and the parliament. Once that happens, external reviewers will come in, issuers will be able to issue bonds, and the external reviewer will give their opinion on whether or not that's aligned with the regulation or not. And so, you know, we will see, probably starting from a low base, but hopefully growing quite quickly, also taking into account the fact that the green bond standard is just one piece of a large puzzle. And we also have this spring proposed a new corporate sustainable reporting directive. Taxonomy is being developed. We have sustainable finance disclosure regulation. Thank you. In particular for participants, for financial participants. So I think we'll see that I think it's actually quite difficult to predict how exactly things will evolve, but they will evolve, and it'll be exciting to follow this.
And we're on good track. Thank you, Axel. Maybe Aldo, also some final words, a message that you want to share to the audience. I think you're on mute, Aldo.
So I would like to reinforce what Axel just said. And I think it is important to highlight that what we are facing and witnessing is a process that will incrementally improve the situation at the service of markets, at the service of economy and society. There is now an enabling framework that is in place that permits anybody who is really of goodwill to take initiative from within the organization they are operating, be it an issuer or an investor. So I have already witnessed in the past year in the dialogue with investors how the entry into force of the taxonomy regulation has increased the quality of the questions and the attention of investors to these aspects that the taxonomy regulation focuses the attention on. Now, also on the side of the issuers, there is the possibility to consider this not just as a burden, but as a constructive opportunity to think strategically about the way in which one wants one's activities to go forward. So anybody that is not just, how would I say, showing two faces, has the opportunity to make things work. And what I would like to highlight is that in all of our efforts in the course of time, we have received the support of our interlocutors on the market side. So this kind of approach is not just about stating things because they look and sound good. It is offering institutions, issuers, the opportunity to establish a new kind of dialogue with investors that can improve the situation already now. And I think this is the most important. So mine is really an appeal to good faith. It is possible to start doing and to start improving things already at this moment.
Thank you, Aldo. That's a very encouraging message. The regulation is there, or it will be coming, and so we need to start somewhere, and at least those who really want to take this forward and make capital markets more sustainable needs to act now. Sharu, any final remark on your side?
I would just like to reinforce 2 points from the evaluation. Firstly, the experience of the EIB shows that there are significant, tangible, and wide-ranging benefits of issuing green bonds. And it's not just about talking the talk, but there are real benefits of walking the talk. And secondly, green bonds have been a very important innovation in the capital markets, providing unprecedented levels of transparency to investors. I believe that green bonds have a really important role going forward in reorientating capital flows to greener and more sustainable activities, and the EIB has really shown the way in this regard.
Thank you, Sharu. So we've now reached the end of this workshop. I would like to thank the audience for asking very relevant questions. And of course, I would like to thank also our panelists who shared their insights of some of the major developments for sustainable capital markets in the year to come. I would like to ask the audience to stay tuned because all of this is now getting concrete. We are now moving to practical implementation of the EU Taxonomy and EU Green Bond standards, and we are looking forward to see how the issuers and investors will embrace this challenge and turn it, as Aldo said, into an opportunity. Thank you very much to all of you, and I wish you a nice day. Bye.
Bye. Thank you very much.
Thank you. Bye.